Yesterday, oil prices sank dramatically after the U.S. Energy Department released statistics on weekly crude oil inventories. According to the published data, U.S. crude oil stockpiles increased, while gasoline inventories, on the contrary, decreased. This data is hardly downbeat, but the market reacted by reducing long positions. The response is quite natural. After all, the asset is already highly overvalued. Nevertheless, it is too early to talk about a further decline in oil prices in the medium term. According to the chart, U.S. crude oil inventories have increased significantly over the past 2 weeks. This is why the market has suffered losses. However, this downward movement is unlikely to be long-lasting, since the indicator is not gloomy enough to push the commodity market to the bottom. Speaking of specific figures, contrary to the expectations, Brent crude oil showed a significant correction yesterday. The asset lost about 5% and settled at $82 per barrel, the local low of the previous pullback on October 13. Brent crude will most likely continue moving downwards if the quote fixes below the level of $82 per barrel. In this case, the benchmark will have a chance to approach the psychological level of $80. Otherwise, the price may recover and return to the local low of 2018. True, the situation in the commodity market had little effect on the Russian currency. Even amid a strong drop in oil prices, the ruble managed to strengthen following yesterday's decline. Thus, the Russian currency advanced to the level of 70.35 rubles per dollar. However, its further bullish run is likely to be limited as the MOEX index also sank. Therefore, the outlook for the ruble is no longer bright. It is quite obvious that a recovery in oil prices and their further growth will support the asset, but the question is to what extent. According to analysts, the ruble may add no more than 1–2%, hitting the level of about 70 rubles per dollar. As for gold, the events in the commodity and foreign exchange markets had a positive impact on the safe haven asset. Gold prices managed to par early losses and continued its bullish trend. The precious metal rose by 0.3%. Currently, the asset is trying to consolidate above the level of $1,800 per troy ounce. In general, gold prices are expected to trade upwards in the short term, but market volatility will remain low. There is no strong upside momentum yet. This means that a significant rally in quotes is unlikely. As you can see, a number of trading instruments entered the previous trading day in the red. The markets are experiencing a correction. Nevertheless, it is obvious that the commodity market still has growth potential. And that is all for now. Thank you for watching and stay tuned.